Hello, hello. Welcome back again, Sarah.
And all of our listeners.
And all of our listeners, of course. Welcome back
Actually
to all of
getting
our
up there in listens. We're pushing 9,000 nearly, I think.
Great.
It's over 8. Know that much.
Nice speaking
The little
to you.
podcast is taking off. I told you we'll be Joe Rogan before we know it. Or one
Love
of,
your
the
vision.
top
I hope that's up on
podcasts.
your vision board.
Picture of Joe Rogan? No. But, nonetheless. Today we are talking about a topic that gets very regularly confused and it's not well known about how it impacts you, which is personal services income and personal services businesses.
Yes.
It is a tax implication. Is that the way to describe it?
Yeah, it's an implication of how your certain income is going to be treated for
Yeah, so a lot of businesses have fancy structures, whether they be trusts or companies with distributions, to mitigate their tax liability and try and ensure that they are paying.
Really?
It's a tax minimization strategy, really, right? But PSI puts a nice spanner in a lot of that works for people if they're not across it correctly, and if they're
and look, I often put the spanner in people's works when they come to me and say that my mate said that I should go as a contractor because I'll pay less tax if I'm a contractor than if I'm on wages. Yeah. And this is where I pull out this little PSI and kind of ruin their party.
Yeah. No doubt enjoy doing the ruining of said party.
I don't actually always enjoy it, and it kind of frustrates me that people get their advice from their mates in the pub. But at least they
do
the pub test sometimes. But what we're talking about when we're talking about personal services income is when more than 50% of the income you're earning from a contract is for your personal exertion or time or your brain power, rather than because you are supplying a good or a product.
Okay, so somebody like me,
your lawyers, your brokers,
professional service providers,
apply to your labourers.
You're not
actually providing any of the goods. All you're doing is providing your time. It applies to you as well.
So if you're a carpenter that is not sourcing and providing materials and is working as effectively labour hire, that income is all personal services income.
All personal services
income. Interesting. So if you're a trust and that is what you are doing and you're distributing 50% to the husband and 50% to the wife,
then you're in trouble. Okay, so let's just take a step back. What personal services income means from a tax perspective is that your income is going to be taxed in the same way as if you were an employee, which means your deductions are restricted as if the same way as if you're an employee. So a really easy one is that as an employee, you don't have any advertising costs. You don't advertise yourself as an employee. So if you're earning personal services income, you're not able to claim advertising costs as a deduction.
Yeah, wow.
Okay. It also means that because it's going to be taxed like it was a wage, you can't distribute it or stream it to anybody else. In your example, you can't be giving half to your wife because it all needs to 100% come back to you. And then the next question I go is, well, can I employ my wife to do some admin? No, you're being taxed like you're an employee. An employee does not need an admin person on their payroll. So no, you can't be giving some of it to your wife. It 100% comes back to you. Okay.
Regardless of the structure that you've got.
Regardless of the structure that you've got. So it doesn't matter if you're trading through a trust, it still has to get distributed all the way to you. If you're trading through a company, then if you don't pay wages equivalent to the income that you've earned, then it gets attributed back to your personal return through the tax rules. Anyway.
I would assume that would impact things like claiming of a car as well.
Yep. So, look, as an employee, potentially you can claim a car if you're using your car for work. Yeah. Right? So potentially you can still claim it, but it just comes back to, those rules. Would I have been able to claim this if I was an employee? And if you were, then yes, you can still claim those costs. But if you couldn't have claimed it as an employee, you cannot claim it under the PSI rules.
So for everyone that's listening that has just had their head exploded, I hope you weren't driving at the time and have not had a car accident. there are some further clarifications around this.
There are. So that is the PSI is the basic test, okay? But there's also a rule that you can be a personal services business, okay?
Yes.
So if you are earning more than 50% of your income from your personal exertion, I'm a prime example. Yes, I am.
Yep.
I'm earning more than 50% of my income from my time and my labour, not because I'm providing a physical product, right?
Yes.
But the personal services business test allows you to say, well, yes, I'm earning it from my personal exertion, but am I earning it from a genuine business structure? Okay. And the way that we look at am I a genuine business structure is who am I earning the income from? So am I earning 80% or more of my income from one client or one customer? If you are earning more than 80% from one client or customer, then yes, you're still in personal services income rules.
You should also probably have been an employee of that actual company.
Yeah. And an interesting point around this is if you're technically employed by a labour hire, but then they may hire you out to 5 different places, you're still earning your income from the labour hire.
Correct.
So therefore, you're still personal services income, even though labour hire may have passed you around to 5 or 6 different businesses throughout the year.
So
Okay.
the difference there, especially in the financial services industry, because I know this conversation gets thrown around regularly that a mortgage broker, for example, is personal services. But if you are not employed and we work on contract with what's called a head agreement, and the head agreement goes to our aggregation service provider. Mine's Astute Financial Services. We're fantastic, might I add. There's lots of different ones out there. They get paid, they collect on behalf of the lender, and they help us with our accreditation, and then they distribute. So effectively, they're like a collection house. They're not an employer because they take a clip off the top for their services, and then they pass the full amount on. That means that we're a personal services business, but I'm not a personal services income.
There's another test that we look at when it comes to brokers, which is the results test.
Right, so that test applies to everybody, but if you don't meet the first two.
To everybody. So are you earning your income for your time or for a set result? So, for example, if you only get paid if you provide a set result, in your case, deliver the loan, then you're working on a results basis. So it doesn't matter how many hours you put into the job. If you don't get that result, then you don't get paid.
And the same for financial planners that might be placing insurances because they're still paid on commission. For a real estate agent that gets paid on commission.
On commission.
For an insurance broker on
real
commission.
estate agent's a good one because if they don't get the result, they don't get paid. Now they may be on a base salary. We're kind of ignoring that for the moment. But if they're on a pure commission, they don't sell the house, you don't get paid. So therefore your results basis, and that can get you out of the PSI rules as well.
Right. So I think the important thing when it comes to PSI is 1, to know that it exists and what it is. 2, the implications of the PSI tests and how they impact your business. And then 3, an advisor that knows what they're talking about and the differences between the tests.
And look, we haven't even gone through all the tests. Only let me halfway explain the 80% test.
I think because we'll go back to that. I think because this is a concept that it gets so confused so quickly.
Really confused.
I'm trying to break it down for people.
Rules and tests around how it works. But at the end of the day, if what you are doing is based on your time, then it's something you need to be aware of and make sure that you have considered in terms of how you're treating your income for tax purposes.
So somebody that has a shop, retail shop, pub or a cafe or a clothing shop, because they're selling a product, personal services doesn't apply.
Doesn't apply because
But if they were a beautician,
generating their income and their profits from selling a good. So again, you could spend all day at a shop and not sell anything. Right? So you're not making any money. So it's not based on your time and your labour. It's based on whether you sell that good or product.
But if you were a shop front that was a beauty therapist or a beautician and you offered facials.
Potentially. So then it comes down to is 50%
including product?
Is 50% from your skill and effort or more from your skill and effort, or is it from the products that you're providing. So say most massage places I go to would be selling moisturizing creams and oils and various other things within their business. So how much of that business is from the product and how much is from your time? And it also relates to a specific individual, right? So as an individual, how much of your time is spent? Are you just the massage therapist and you have nothing to do with the sales of the products? In which case you're very time-based, right? Or you could be split on doing both. So it can get really complex when you start to get into the detail of things like that and exactly
and how do you, as an accountant, how do you clarify that for your clients as
lots
the
of questions.
messiness? Lots of questions, right?
Lots of questions and fully understanding what the client does on a day-to-day basis, how they charge, how many clients do they have, and that's where some of the other tests come into place. So if you satisfy the 80% rule in that you've got you don't just have
more
that
than one
large
client.
single client, you've got lots of different clients. There's some other tests that you can then go and look at, right? And these are the unrelated clients test and the employment test and the business premises test. So unrelated clients, have you got two or more clients that aren't related to each other, right? So if my only clients were you and your sister, right, they're not unrelated, so I can't treat you as separate clients, right? But if
because there's a technical relationship because
there's a relationship
my sister is my immediate family member.
Yep, right.
Okay.
Whereas if my two clients were you and somebody else that you don't know, I have two unrelated clients. I might be earning my income 50-50 from the two of you. I technically have a personal services business.
Yes, so there's a difference between PSI as an income for you individually and PSI as a business. And I don't know if we've actually qualified for people yet what is a personal services business.
Right, so a business is you are earning your income from personal services. At a base level, I have personal services income, but I don't fall into the personal services income tax rules because I meet the tests that I'm running a business. Okay? And so I don't have to be restricted by the deductions that an employee would have. I can claim the advertising and the website and all the other costs associated with running a business.
Yeah.
Like any other business could.
So you would disclose to the ATO in that instance that you're not a PSI, you're a PSB, and therefore everything applies in the traditional way that you'd be able to claim.
The main restriction, though, that can still apply to personal services businesses is that at the end of the day, if I am the only accountant in my business, I am the one still generating the income, and therefore the majority of that profit should be going to me.
Yes.
Okay, so potentially I could employ my husband to do some admin or to help out with the business. I can only pay him at a market rate wage, and he needs to actually be doing work. Actually be doing work in the business.
Yes.
But the majority of that income still needs to come to me because at the end of the day, I am the one generating the income. Okay.
And I'm assuming if you're wondering why the bloody ATO has done this, it's literally to ensure that they're encapsulating the tax that would have been paid on that person had they not had. So it's to stop people, like you said, that are not necessarily actual businesses, but like would set up as a company, as a contractor to avoid paying the tax that they would pay if they had just been employed.
Let's go really typical example. You set up a company, husband and wife. Husband's doing all the work, wife doesn't work, right? But husband pays 50% of the income to his wife, and therefore they're both earning lower amounts and therefore paying tax at lower tax rates and therefore paying lower tax.
Yeah.
So as the husband and wife, we're going, you pay less tax. As the ATO and society and community, we're going, well, that's less revenue. Why do they get to pay less tax when effectively he's just earning a wage?
Exactly.
Right? And that's where these rules come into play to say, well, you're effectively earning a wage, so you should be taxed like you're earning a wage.
Yeah. So everybody else that is actually just earning a wage and doesn't have the capacity to set themselves up as a company and pay wife, or vice versa, wife pay husband. Yeah. I've seen it go in multiple ways, or wife pay adult child.
Yep.
It goes in a whole different range of ways. You know, again, completely different podcast episode as to what our tax gets paid for and how it gets used. But the reality is that there are rules around this that are designed to protect everybody and make it fair and equal for everyone. And PSI and then the PSB is designed to impact that so that it is an equality of people that should be taxed at the rate they would have been taxed had they just been employed.
Yeah. And look, so the other tests are your employment tests. So maybe I'm not the only accountant and maybe I actually employ 5 other accountants. And they're all able to what we would call fee earning. So they're bringing in money and profits to the business.
Revenue producing.
Maybe not just as much as I am, but they are also generating profit and business to the business. So therefore, the profits, I am running a genuine business. Maybe for me it's labour and I'm not selling a widget, but I'm still running a genuine business. So therefore, I shouldn't necessarily have to pay all the profit to me because it's not just me generating those profits.
No, because it's a genuine business. You literally have other income producing.
And we all know the way businesses work. I might pay my employee $100,000, but I'm hoping to make profit of $150,000 or $200,000 from that person.
Why would you do it otherwise, right?
Right. So that $50,000 or $100,000 of profit that I'm making off that employee working for me is not me generating that income. That's someone else. So in those circumstances, there is ability to start to split some of that income. The way the ATO looks at it is as long as I'm still receiving what would be considered a fair remuneration for the work that I am doing.
For the wage, for the work that, like, if you were employed by a big...
I can't pay my employees $100,000 but myself only $50,000 because I'm streaming the income to lots of other family members. ATO is not going to let that fly. I've still got to be paying myself a decent wage.
Yeah, okay.
Or what is considered a decent wage for the industry that I'm in and the work that I'm doing within that business.
And look, guys, I have been back and forth on this conversation multiple times with Trudi, not just for my own circumstances, but for clients that have been getting some, advice that perhaps doesn't match. Yeah, it's not, it's incorrect. I didn't want to say it was incorrect, but it's inconclusive, shall we say, or it doesn't meet the full test straight. And so, again, every time I hear this, my head still gets exploded because there's so many, it's so nuanced as to how do you qualify it and how do you calculate it and how do you come out the other side. So I think the important part, again, is to, one, as we said earlier, understand what PSI is. Two, understand how it impacts you. Two, don't take your tax advice from the bloke at the pub or friend in the shop. Trudy's pet hate there. And three, get quality advice. And here's the thing. If your accountant or your advisor says that no, and you really think that you meet the business test the way Trudy's described it, perhaps it's time to look to get a second opinion. I see this all the time, specifically in my space, in the finance world space, for the reason that Trudi and I discussed earlier. Like, there's the results test, and a lot of them are in a position where they might actually engage their spouse to do their back-end processing and administration work and are told that they cannot split their income with them, but they can only pay them whatever the equivalent role would have been, and they have to wear the rest. But the reality is that they only get paid if the deal settles, so therefore it meets the results test. I think knowing what the tests are is really helpful because then you can kind of work it out for yourself.
And there is flowcharts available online.
Everyone loves a good flowchart,
and that can really help you clarify. And the other thing that I think is really important is that a lot of people ring accountants and just get advice over the phone. Ask them to put something in writing as to why they think that that's the reason. Why do they get to that particular result? For two reasons.
Advice to start with.
It helps you to understand exactly what they're saying and how they're getting to that position. But two, if you disagree with them, having it in writing allows you to go away, think about it, maybe do your own research or get a second opinion and come back to them and say, well, but what about this? Or have you considered? Right? And you shouldn't have to. Hopefully your accountant's giving you the correct advice the first time. But having it down in words, it's just a better way of getting your advice than constantly getting everything over.
It also means that if you think... The other thing here is having a lack of understanding of what the concept is may mean that you misinterpret potentially what is said to you because it's effectively like speaking a foreign language. Like I said, we've talked about this, I reckon, 35 times, and every time I hear it, I'm like, wait, hold on. And so at least if it's written down, you can read it. And then if you do need a second opinion, you can take that and say, have I interpreted this correctly? Have I understood the advice that I've been given, et cetera, et cetera?
I did one recently where a client came to me to get the second opinion, and
Yeah.
I gave the opinion in writing.
Yeah.
And they actually then took that back to their original accountant, who went, "Oh yeah, okay, maybe that's right."
Shit.
Right.
Hey,
So
new accountant.
also having it in writing allows you to take it somewhere else and say,
Exactly.
"Well, do you agree with this?"
But would it also then mean that, say, the ATO came down on you, like from a professional advisory position, that you've then also personally got a fallback? Well, my accountant has given me the advice on this, and
So
this is why my
the way that comes into play, it comes down to penalties, because as a taxpayer, you've taken reasonable steps to get advice.
Yep.
And you've followed that advice. So when the penalties come down, the ATO has like a range of penalties depending on whether you've just gotten it wrong because circumstances, or whether you've deliberately got it wrong, or whether you were reckless. You know, were you intentionally trying
because
to avoid?
We sign
paying
off on our
right?
tax returns that, the accountant doesn't sign off on the tax return. It's we that take responsibility for what's in the tax
we
return.
do, but yeah, it still is you that is ultimately responsible for it. But having that written advice can help you say to the ATO, well, I didn't deliberately avoid paying tax. I wasn't reckless.
No.
I went and got advice and I followed that advice. So I did what I could. So the ATO may still apply a penalty, but it's going to be a much smaller one.
Should be.
Then if you didn't have any written advice at all, well, then potentially ATO could go, well, you were reckless, or you've done this deliberately, and they might try and argue a higher penalty.
So, Ms. Cowan, I would like my advice now in writing about
PSV
for my business. No, I have it in writing already. It's already included in my notes because, I couldn't resist. Yeah, strong topic to try and wrap your head around, guys. You might need to listen to it twice or 45
But definitely let us know if you've
times.
got any questions, or if you're not sure if you've been doing it right. Always happy to provide a second opinion or send you some guidance on what you should be looking at.
Fantastic. Until next time, guys, you've been listening to Financial Fofo.
Thanks.
Thanks for listening to this week's episode of Financial Fofo. We really appreciate you tuning in and hope that you have subscribed to our channel. I just wanted to let you all know that the information and material in our podcast and any supplementary and associated information available is for general purposes only. It should not be taken as constituting professional advice from us, the podcast owners, and our special guests, and we recommend that you seek independent, suitable advice that is specific for your unique circumstances. Thanks for tuning in. Hope to see you next week. Please, please, please send us, use our link and send us any requests or any feedback. We'd really appreciate it. Cheers.